Adding a client's information into RightCapital is a simple process that produces engaging results. In the initial 6 steps of data entry, advisors use Step 5, Expenses, to show outflows within a plan. If an advisor is using a goals-based projection, the system will eliminate the Add Expense feature, as expenses are not applicable within a goals-based projection. In cash flow planning, RightCapital relies on expenses to accurately project a client's net worth into the future. Expenses that are not funded through income will automatically deplete invested assets and reduce overall return. As a default, RightCapital will automatically generate 2 cards for each client plan, one for pre-retirement living expenses and the other for taxes and fees. In the pre-retirement living expense card, estimate the current monthly expenditures for your client. These expenses represent outflows your client will incur before the first of either the client or the co-client retires. The pre-retirement living expense card is set to grow at the general inflation factor, set within the Assumptions tab of the Advisor portal. Outflows like mortgage payments, loan payments, credit card payments, and insurance premiums that have already been entered in the net worth area should be excluded from expenses, as they have already been counted within the software. The taxes and fees card allows advisors to indicate any local or municipal taxes that need to be applied within a plan. Keep in mind that federal, state, and FICA taxes are automatically applied based on the previous data entry. This area also allows advisors to input any miscellaneous itemized deductions not previously captured. Advisors can also adjust percentage of dividends assumed to be qualified, adjust the percentage of capital gains assumed to be short-term or long-term, and input any capital loss carryover. Advisors can also edit the assumed portfolio turnover in a given year. This portfolio turnover is used to calculate annual gains and losses in the taxable accounts. Lastly, average AUM fees can be input to indicate a fee percentage that will reduce all non-annuity invested asset returns. When using the Add Expense drop-down menu, advisors can choose from different options that produce a different tax treatment. Medical expenses will be reflected appropriately as itemized deductions, while alimony will be an adjustment to income on Schedule 1. If you have entered a credit card or loan with a non-zero balance, you will see the option to input an extra debt payment expense. That expense will allow you to enter a one-time or recurring payment to lower a client's debt. You can use other expense cards to customize expenses, including start and end dates, inflation, and tax assumptions. The above-the-line deduction, non-cash option can be used to reflect a tax deduction without impacting cash flow. Some advisors with detail-oriented clients prefer to use a series of other income cards instead of the bulk pre-retirement expenses area. As always, if there are any additional questions on entering or adjusting expenses within the plan, please reach out to our advisor support team through the live chat feature on the bottom right side of the screen, or search RightCapital support options within the Help Center.